Hey, welcome to Prosperity Mindset. Welcome to Prosperity Mindset. Listen, the topic of today is why cash value life insurance with living benefits, right? Um, my name is Maxwell Akinsenwa, and I am the CEO of Titan Evolution Group. So this topic is important, right? Because a lot of people have life insurance, right? But these are when I meet with a few clients, right? These are some of their oldest type of life insurance, right? So in the past 6, 7 years, at least after COVID or after COVID, there's been so many different upgrades with life insurance, right? But I kind of want to go over some details first before we actually get started, right? Because there's really two different type of life insurance, right? The very first one is what's called term, and a lot of people, know what that is. The people they have that through their job, it's typically the cheapest type of life insurance, right? It costs less, but it gives you the most amount of death benefit, right? And typically with that one, you can only get it. So whatever term you purchase it for, whether it's 10 years, 20 years, or 30 years, after that time frame is over, you no longer will have insurance coverage. Or technically speaking, you still have the coverage if you decide to keep it, but it now becomes what's called annually renewable, which means the premium goes up every single year. Now, the problem with that is, let's say, for example, you had a 30-year term, and you purchase it for, let's say, $50 a month, for example. Okay. Typically, after that 30 year is over, to keep that same policy, your new premium now might be roughly, let's say, 200 something dollars for that same policy. Then the following year, it might be 300 something dollars. Then the following year after that, it might be 400 something dollars. Then the following year after that, it might be 500 and something dollars. I've experienced a lot of clients who have called me and say, "Hey, I received this letter, from my insurance carrier that my premium is going up, and I didn't know this. Nobody told me this." Because some of the problem is most agents don't stick around long enough. The average agent, is out within year one. Okay, so it's very few agents who make it past year 10 and stuff like that, right? So this is what a lot of people don't know. Some people have a policy and they believe that their policy lasts them forever, and it really doesn't. So if you have a term policy, if you take it out, and it's actually in there by law, they have to put it there, so you're actually seeing it, right? After so the maximum you can get for a term is about 30 years. Okay, after 30 years, you no longer have coverage. So I'm gonna give you an example. So let's say you meet with a 35-year-old, right? And the 35-year-old get a 30-year term policy, right? Now, and that person keeps that policy, okay, for the length of your 30 year. That put that person roughly about age 65. Okay. There's a high likelihood, a high percentage that this person is still going to be alive by the age of 65. Okay. So at that point now they have to make a decision. Do I still want to keep this policy now? The one I was paying $50 a month for, now it goes to 200 and something dollars a month, and the following year is going to increase and keep increasing. Or do I want to now reapply to get either another term, or maybe this time go around and get a permanent policy? Now, the problem that I have with that scenario, because there are companies out here who tells you to buy term and invest the difference, right? And in my experience, the invest the difference side rarely ever happens. But you buy the term policy, and now you pass the time frame that you purchased it for. But in between that time, so let's say you bought a 30-year policy, you were 35-year-old, you were young and healthy at that point. And in between that time, health situation happened. So let's say you had a stroke or heart attack, and things like that. Now it makes it even more difficult now to insure you, because age is a factor, and then health now is also a factor, right? So I'm gonna give an example. My sister, for example, her fiance is going through some health challenges, right? That she had called me and asked me if I can get him coverage. And he's a young gentleman, he's around my age. Um, Now, because of that particular health situation, without going too much information, nobody's going to cover him for another 3 years or so, because the carriers want to make sure that this person gets healthy again. Okay, so this is some of the problems that people have when they buy term. Is I bought it when I was younger, I was extremely healthy, and then in a 30-year period, life happens. Okay, so now they're not able to get coverage again, or if they are able to get coverage, is dramatically lower than what they had covered before. Okay, and this is where I believe a permanent policy, cash value policy, with living benefits, make more sense. And when we say cash value policy, it's things like whole life, universal life, and index universal life. Okay, now what's the difference? Again, term has a time frame, whether it's 10, 15, 20, or 30 years that you purchase. After that time frame is over, you no longer have a policy anymore. Or if you choose to keep it, just know that the premium is going to continue going up every single year. Okay. But with the permanent policy, the cost is a little bit more. But two things are happening here. The cost is a little bit more, but some of that money goes into a savings account, which we call cash value, for you within the policy. Okay. And depend on the kind of cash value policy you have. If it's a whole life, you're probably going to earn about 3.99, maybe 4%. Okay. And I'll go into that in a few. If it's a universal life, it's probably going to be about 4 or 5%. And then if it's an index universal life, now you're talking about earning a significant amount of interest return. In most cases, the cap for an index policy is going to be about 12.75, which is good. Okay. Now, along with that, though, your premium is fixed. Okay. And then also your policy lasts you, in most cases, into your hundreds. So the policy will actually outlive you. The average male live to age 81, 82. The average women live to age 87, 89. Okay. Most permanent policy are going to take you well into age 100. So the policy will actually outlive you. You don't have to worry about a premium increasing on you. And a lot of people don't know this too. Typically with a 20 or 30-year contribution with a cash value policy, you can actually stop making premium payments after year 20 to year 30 and don't have to make any premium payment ever again. And your policy will still last you forever. At the same time, you're also able to pull money out if you need it, right? So that's what a cash value offers you. Okay, it offers you the opportunity for you to have a policy that is going to last it's going to do the job. It's going to last forever. Most 99% of term policies do not pay out, and you guys can actually Google this. And the reason why is most people will actually outlive the policy. Okay, because again, it is a 10, 15, or 20-year policy. And most people, again, most men is going to live to age 81, 82, somewhere around there, and women age 87 on the average, right? So most people will outlive a term policy. That's why 99% of it don't pay out. Okay, but most people will not outlive a permanent policy, because again, the average lifespan on the average for a male or female is like 85, 87, somewhere around there, right? And the policy take you into age 100 or more, right? If it's funded properly enough, it can even take you to age 120. Okay, so that's that. Then I want to talk about why the cash value make a whole lot of sense. The cash value policy make a whole lot of sense, because this policy can be used for many, many things. Okay, one is mortgage protection. Okay, so let's say you're a homeowner and you purchase a property. Let's say the property is like $500,000, for example, right? You get a permanent cash value policy, right? And the reason why that is this: you took out a loan for $500,000. If you should pass away, your family will get a $500,000 death proceed. They can now cut out a check to the mortgage company, and the house is paid off free and clear. Okay. That is so important, because a lot of people, it's two reasons why people actually lose a home. Somebody falls sick, which we're going to talk about in a minute, or somebody dies. You understand? Those are really the two main reasons why people lose a home. It's never because really people, people can't afford it. Most of the time, it's usually somebody falls sick or somebody dies. So, for example, if your mortgage, let's say you have a loan for your monthly payment is $3,000, and you fall sick, well, you will probably able to pay that $3,000, but your children might not be able to pay that kind of money every single month. So that the house now goes into a default. Your spouse may not be able to pay that money by herself every single month. Now the house goes into a default. You understand? So this is why the cash value policy make a whole lot of sense. That's number one. Number two, if you fund the cash value policy properly, it can actually help you pay your mortgage off 15 years early. Now, if you are interested in that aspect of it, you can email me at evolve@Titan Evolution Group. That's evolve@Titan Evolution Group, and we can sit down and have a talk, a conversation about it. But a lot of people are using these cash value life insurance policies as a way to pull out money 10 to 15 years later to send to the mortgage company and pay the house off free and clear. So people are paying their house off, in half of the time, which means guess what? You're paying less in interest, which means what? More money goes in your pocket, which means what? I now no longer have a $2,000, $3,000 mortgage. Now I can redirect that money into my retirement account, which means what? Now my retirement account can start to grow even more, which means what? Now when I'm older, I have significantly more amount of money in retirement. Okay, this is the one main reason, and this is what the wealthy people have been doing for centuries. You know what I'm saying? We watch a lot of things on social media. People talking about stocks and things like that. Yes, do they do stocks? They do, but most of their money is derived inside life insurance because there are guarantees inside life insurance. There's also protection. Protection again, which means if I pass away, my family's gonna be okay. If I pass away, the mortgage can be paid off, and the family can still keep the house. Okay. Now I want to talk about you these policies also being used as a retirement income source. So most of us that have jobs have our retirement through a 401k or 403b. Okay. A lot of people don't know this, right? But those particular plans are taxable account. So what does that mean? That means you put money into it right now without taxes being taken out to be able to withdraw later on. And when you draw later on, you're going to pay taxes on it. Okay. Now, I typically ask my client, right now, the country has trillions of dollars in debt, right? So I ask people, I say, hey, listen, what's the likelihood of taxes going up 15, 20, 30 years from now? This is a very high likelihood because we have trillions of dollars in debt. That has to get paid down. Well, how do you pay down debt? Taxes. It's happening right now. If you look at, I think, for example, over here in Maryland, I forgot what they said the Maryland deficit is, and now they're thinking about increasing property taxes. Okay, so in the United States of America, to pay down debt, right? Most of the time, it usually happens by way of tax increasing, right? So I usually ask my clients, listen, if I can show you a way that you can safeguard your retirement income from taxes, would you be interested? And most of the time, they usually say yes, because with the life insurance tax code, right? And you guys can look it up. This is the IRS tax code themselves that they implemented inside life insurance, right? That the money you put inside life insurance will be withdrawn later on tax free. So I'm gonna give you an example. You have your 401k at your job, and with the 401k, let's say you save 500 grand in the 401k, and now you're ready to retire. Well, you have a silent partner in that scenario that's waiting for you to retire. And that silent partner is the IRS. The projection that taxes, 15, 20, 30 years from now is going to be is roughly about 37 to 43%. So can you imagine you have $500,000 saved up and you plan on retiring, and then you call the provider, whether it's Fidelity, T. Rowe Price, it doesn't matter, right? You say, hey, I want to start withdrawing my 401k for income, and then now hit you with the tax implication, and you now have to pay 40 something plus percent in taxes. You're probably gonna say, hold up, I can't live off of that. So you're gonna stay working, right? Scenario number two, you sit down with somebody like myself that can guide you towards a tax-free retirement. Still, you save 500K, but now that 500K is inside a life insurance policy. And you call the insurance company and say, hey, I want to start pulling income stream for retirement. You pay zero taxes. Zero. Which means you're gonna have a better living lifestyle in retirement compared to the person that have a taxable account like a 401k or 403b. This is the reason why a lot of people are running towards the index universal life policy now, because they're getting this information now. And mind you, the wealthy people have been doing this for a while. Some of the wealthiest people that you guys may have heard of have the biggest amount of life insurance. Now you ask yourself, why would a wealthy person need life insurance? It doesn't make any sense. They're already wealthy. They understand taxes. And wealthy people will always direct themselves and put themselves in the position to pay less taxes or zero taxes. Okay? So this is one of the greatest benefit for a cash value life insurance. This is one of the main reasons why people get these particular policies compared to a term policy, is the tax benefit that they get when they hit retirement. Or as a matter of fact, you don't even have to wait for retirement. Let's say, for example, you've been contributing to your cash value policy for 50. I know an individual who was purposely funding their policy for 10 years. Okay, max funding their policy to be able to pull cash out later and pay for their house cash. They were able to pull cash out later to pay for their house cash. No stipulation, no taxes, no penalties. You can't do that with a 401k or 403b. There's going to be some penalties. There's going to be some taxation involved if you want to pull out money in that scenario. So with the cash value policy, you actually have more flexibility and you have more control over your money. So this is the greatest thing that people love about these particular policies. Now, I mentioned cash value life insurance with living benefits. Most people have the old type of life insurance. Okay. These are policies without any living benefits. Okay. Most people have the insurance through their job. I hear a lot of people say, oh, I have insurance through my job. Let me touch on that for a second. When you have insurance through your job, you technically don't own it. Like, you have it while you're working there. If you quit the job, you lose it. If the job quit you, you lose it. If you retire, certain jobs may let you take it with you, but the premium goes up excessively high that most people end up saying, you know what, no, I can't afford that. Let me go out and get outside coverage. Because what happens is you come outside of a group plan, which is the reason why it's so cheap, to then a individual plan now. So now you're paying the individual price at your current age at the death benefit that you have. Okay. So I always tell people, You need insurance outside of your job. You control that. You don't control the one at your job. A job insurance also is not going to have any living benefits. It's a group term. Okay. Other people might have insurance through their auto carrier. Those don't have living benefits. Okay. And most auto carrier don't have index universal life policies. Okay. They might have whole life, they might have universal life, but they don't have an index universal life policy. Okay. The index universal life policy is the beast of all the permanent cash value policy, because the index universal life policy allow you to make the most amount of interest return, so which may allow your cash value to accumulate faster and greater than a whole life would or a universal life would. Okay. Now, what is living benefits? Okay. Living benefits, the best way for me to define that for you is it covers you in the event that you fall into three categories. If you become terminally ill, chronically ill, and also critically ill. So terminal pretty much means you have 12 months to live. Okay, that's terminal. Some kind of form of a bad cancer or something like that. You have 12 months to live. Okay. And then chronic means pretty much you are unable to perform 2 out of 6 of the daily living activity. Bathing yourself, clothing yourself, using the bathroom by yourself, feeding yourself, continence, things like that. Okay. Then you have critical things like cancer, heart attack, stroke, dementia, renal failure, right? Now I want you guys to ask yourself this question. How many people do you know who is going through some form of renal failure, kidney disease? How many people do you know that have had a heart attack, stroke, dementia? How many people do you know? Okay. A lot of us, if you line up 10 people and ask them that question, 6 out of 10 probably know somebody that they're very close to that have experienced that scenario. Okay. What living benefit does, and I love the insurance company for doing this, is they tie that with your life insurance policy. So let's say, for example, your policy is $500,000. And let's say, for example, you fall into a situation where, let's say, you had cancer, right? Certain carriers will allow you to get up to 95% of your death benefit while you're still alive. That's why it's called living benefits. And you can pull that money out tax-free, mind you, and use it for whatever, whether it's better medicine, whether it's to get like a better doctor or second opinion, whether it's to pay mortgage, car note, and things like that, right? That's what that money is for. So, for example, most doctor would tell you that if a person have a stroke, the second one is usually coming around the corner. Because why? Most Americans have less than $1,000 saved up for emergency. So if you have a stroke at the wrong time, what are you worried about? How you gonna pay the mortgage? How you gonna pay the car note? How you gonna take care of the kids? How you gonna keep your electricity on? All these things. So you're worrying, right? And then that worrying heighten the chance of you getting another stroke. Okay. But if you have a policy with living benefits, okay, and God forbid you had a stroke, for example. So let's say your policy is 500 grand. You have access to 95% of it, right? You can easily pull out, let's say 250 if you want to. That's 50%. You have access to 95%. And you can take that money out and be able to use that money to take care of to get better medicine, okay, to pay the mortgage, to pay electricity, everyday expenses you're able to take care of. So guess what? You're not worrying anymore. All you're doing now is focusing on your health, going to your appointments to see your doctor, doing your physical therapy, and the bills are being paid. I love it. I love it. And the reason why, I've been in business now for 16 years, right? And I've had three friends, three people who were close to me that I've helped file claims for this that have saved their life and their finances. Okay? So I've seen it work in real time. You understand? Most people that don't have liquid money saved up, let's use a spouse situation, for example, right? And let's say it took two of them, income wise, to survive on a monthly basis, and one person falls sick, right? That and so not only one person falls sick, income goes away. Okay, now that other person don't have money to pay for a caretaker to come in and take care of you. So now that other person got to take time off of work, which guess what? I mean, now they're losing additional pay. Let me tell you something. It is the most financially destructive thing that can happen to a family. This is why when I said in the beginning, most people typically lose a home in two scenarios. Either somebody falls sick or somebody dies. That's usually the reason why most people end up losing their home. But now you have these particular policies, right? That have these living benefits, right? It's a game changer. And I want to touch on something real quickly, right? Because just a couple of months, and I don't really want to, it's a very uncomfortable conversation for me to talk about. But when the CEO of the United Healthcare gentleman got murdered, right? Some of the comments that I was seeing on social media was because they were denying claims, right? And I was doing some research, right? And I think some people say, they deny my mother a claim for her organ transplant. They deny this person a claim for a heart, on surgery, all these things like that, right? Can you imagine if those family had life insurance with living benefits and your healthcare provider deny your claim for treatment? You can now turn around to your life insurance policy and say, hey, you know what? I have my life insurance with living benefits. I'm going to trigger that and get the money out to do my heart surgery. I end up researching, right, to find out how much it costs for a heart surgery. If I remember correctly, I think it's about 200 and something K for a heart surgery. So can you imagine if you had your life insurance with living benefits and the healthcare company denies you? Okay, no problem. Let me go to my life insurance policy and file a claim, because as long as your doctor say you have this going on, that's an easy claim. As long as your doctor say, yes, you actually need a heart transplant. Okay, you actually need organ replacement. You had a stroke. You have renal failure. All you need is a doctor's letter, and file that claim. You got cash money coming to you. So, to me, I think this is a game changer. For anybody who who may have experienced, something like that, in their life. Again, I've had three friends, who have went through this scenario here that I've been able to help file a claim. And have come in. There's one young lady in particular, right? I've known her for 20 plus years. And when she went through her cancer situation, health wise, she just wasn't strong enough. She was sick all the time, all tired, and the job, pretty much had to, in a way, let her go. With that being said, things start to pile up on her. She didn't really have money saved up like that. Okay, so um, when we filed a claim, I believe at that time she was roughly 3 to 4 months behind on rent, car note, quite a few things. That check came in on time. She was so happy. She was so for I was even happier than she was. I was happier. I felt like Superman because I was able to help her while she was, going through what she was going through. And then roughly a year later, she became cancer free. And I truly believe the reason why that happened so quickly is if you're not worried about how you're going to pay your bills and you got a huge sums of money in your bank account, right? And your bills are now in auto pay. All you're doing is going to your doctor, getting your treatment, doing your physical therapy. The chance of you getting better is greater because you're not worrying. All right. So listen, I'm gonna type my email here for you guys. If you have any question or this is something that you might be interested in, um, please email me and we could set up a one-on-one. Give me a second. We could set up a one-on-one with you to go through and see, if we can be of service to you. Let me see here. Najee, thank you so much for that. Yes, this is my first this is my first live stream. Yes, I've been trying to do this for a while, right? But I've been putting off for a second, so I figured, I go because I have so much testimonial, that, and again, I've been in business for 16 years, and I remember when I first started business, they was telling me, after a while, you're gonna start seeing, people filing claims for death claim. Even my one of my good friend, his father passed away. It was last year summer, and it's funny because I 15 years ago, I was trying to get this gentleman to get a policy, and he was just not budging. And then he got remarried, right? And the new wife made him get a policy. And about 2 years later, he passed away. Now, the money that came in from that death benefit, I believe the mortgage balance at the time was $28,000. So he was almost done with the mortgage, right? But the new wife doesn't really work like that. So that payment, she wasn't going to be able to, take care of her own. So that money came in, and she immediately cut a check to the mortgage company and paid it off. And she was like, Max, thank you so much, thank you so much, thank you so much. And then she had a little bit extra left over. I drove past the home. I think a month or so later, she's doing some renovation in the place. So, it makes me feel good as an agent, seeing these things work for my clients. So yeah, I've seen it in real time. It was a gentleman who, and it's a sad story, in Massachusetts, who passed away, young kid, and he passed away. And I remember when I first sat down with him, he didn't really understand the concept, of a index universal life policy. But then he just ended up calling me like 2 months later, say, hey, you know what? I think I want to do that plan you was talking about. And we end up doing a pretty decent amount. I'm not going to disclose that, but it was a real decent amount, right? And the kid ended up drowning 2 months later. It was the saddest thing I've ever seen, right? But that proceed went to his family, who was in another country right now. And I'm gonna just say, that amount of money outside the States, you're well off. Okay, so yes. Sky plays. Will the premium go up after pulling money out? No, the premium does not go up. Your premium stays the same. Nothing changes at all. Let me see here. I believe. All right. So I thank you guys for getting on my live stream today. I'm hoping to do more and more of this because I love delivering the information out to people. I think this is a great thing. Right now, it's sad to say, in America, roughly 50% of Americans do not have any life insurance. 50% of people are walking around here without any life insurance. So I know for sure they don't have any living benefits, right? And 1 in 4, I believe, Americans are obese. I believe probably it might be 2 in 4 are obese. Probably another 1 in 4 have a high likelihood of getting a heart attack or stroke and things like that. So this is important, guys. This is not about dying, because most people are going to live a long life, but this is about, you know, your standard of living while you're living. Okay, this is about your health. You understand? This is about you making sure that God forbid something happens to you. Okay, you can still take care of your family, still maintain your livelihood, or even heal faster and better. Because guess what? You have a policy with living benefits, and God, it actually allows you to sleep better at night. Because most people are out here every day risking it. It gives you peace of mind. Most people are out here every single day gambling, gambling. Okay, it's like, for example, you getting in a car without auto insurance. Your heart is like boom, 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 boom. And from the time you leave your house to your destination to driving back, your heart is like boom, 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 because you never know, someone can hit you or you can hit somebody. You understand? So it's the same thing I look at with life insurance. It's like when you have children, responsibilities, spouse, mortgage, and things like that, and you out here without life insurance, and you are taking a massive risk, on your family. So listen, I hope this was very helpful to everybody today. And again, if you guys, need my service, I put my email in the chat. Okay, and you guys can just message me directly also. And let me just give you my direct number too. You're free to text me if you have any question. It's 443-208-5480. That's 443-208-5480. Again, thank you guys for getting on, and I'll talk to y'all soon.